I am Gaurav. I am a senior principal with Kearney, and I have been working on topics related to energy transition over the last 8 years with the firm. I also have my colleague here, Udeep. Udeep, if you want to introduce
Hi
anything.
everyone, pleasure to be here again with Kearney, senior principal, work a lot in the energy and process domain, helping clients on a variety of topics, including a pretty interesting one to help a Maharatna company chart out their net zero plan, including some of the, and that's where, a company of that size, we interacted with a lot of startups as well to bring forth new age technologies to really tackle the problem, right? And had the first hand experience to also understand the magnitude of the problem and really understand the difficulty. While there is a lot of promises and targets around net zero, once you peel the onion, we realize really what's in there and what kind of commitment in both in terms of management, bandwidth, capital, etc. that we're looking at. So fantastic to be here. Looking forward to the next half an hour or so to interact with all of you. Yeah. Gaurav, back to you.
Thanks, Udeep. Cool. I think while this slide may seem very cliched, especially on the last day of IEW summit, but overall, I think the message is not lost. It is very clear. World over, we are seeing energy transition. Uh, of course, there are a lot of numbers, statistics, and there are various scenarios. Hard to say which one will pan out, but there are 4, 5 things which are beginning to get very decisive and very clear. One, we will see conventional energies come down significantly, and conventional energies like oil and gas, they will see a peak at some point over the next decade and a half. So oil, for example, there has been a lot of talk around oil peaking around 2030 initially, then 2040, 2035. But it is writing on the wall that some of the conventional energies, they will peak and then they will continue to decline. The other crucial aspect is the new energies, especially electrification, that is going to rule in terms of the overall energy basket. And, while there are some numbers, statistics, but overall, in the overall energy basket, there will be about 50% energy coming from electricity. And you will see a lot of drives being electrified, a lot of transition happening towards renewables to that effect. Uh, Energy transition is also, it is already attracting a lot of capital, meaning there is a lot of money being pumped into the entire energy transition. Overall, the estimates are anywhere between 10 to 30 trillion dollars being pumped into this. And the overall market size will significantly shift towards renewables, towards biofuels, battery and other storage sources. That is going to be a reality increasingly coming into fore. I think with this background globally, I will just talk about the opportunity size for India. And we all know India's opportunity in some manner is very unique to us. India will continue to see oil and gas grow, but it will also see the alternate energies, the renewable energies grow at an even faster pace. So while the oil and gas could grow at about 1 to 2% CAGR, we'll see about 5 to 6% CAGR for the alternate energies in India. And if we look at few examples, so renewables, India, while it is third largest in terms of solar capacity addition, it is going to be growing at 25% CAGR overall. And if we look at any industry right now, you will not find growth rates or you will not find CAGRs that are as high as that. So needless to say, and I think enough stressed, we will see an increasing transition towards new age energies. And these new age energies, of course, will bring a significant amount of investment. These will bring a significant amount of change and transition when it comes to the overall landscape. What we have looked to do here is just talk about few of the, uh, as part of alternate energy basket, we have talked about few of the energies and what does it mean in terms of the investment size, what does it mean in terms of physical progress. So renewables, for example, is a 200, 250 billion plus opportunity. In India, you'll see about 110 gigawatt of wind, 300 plus gigawatt of solar being established. Next, storage will again be a significant opportunity with about 100 plus gigawatt hour complementing the renewables. This will again be a 150 plus billion dollar opportunity. Bioenergy, compressed biogas, biofuels, all of that would be a 80 plus billion dollar opportunity. And we'll see significant amount of distributed CBG plants, biofuel plants being set up in India. Then related to this, we'll have two very distinct opportunities that one can look from an entrepreneurship standpoint. There is hard manufacturing and then there is service opportunity. I will straight away get into the overall ecosystem play as one can look at. And if you look at this chart, there are few opportunities that you believe or that one may believe would belong to the big boys of the industry. So a lot of, for example, the sand to silicon play may be dominated by large consolidated players. But there are opportunities across the value chain where new age entrepreneurship will become increasingly important. So for example, if we look at manufacturing side and then if we look at generation services and the consumer end, there are distinct pockets of opportunities that one can look to get into. So for example, the entire ancillary industries, so manufacturing of transformers, cables, that is a significant opportunity unfolding in India. And that could prove to be a significant game changer for some of, entrepreneurs willing to get into this. Similarly, the hydrogen ecosystem when it comes to electrolyzers, for example, that could be dominated by large players, but rest of the ecosystem presents or lends itself to a significant entrepreneurial play. On the generation end and on the services end, if we look at those two put together, we see again, there is, while there are mega scale power plants or renewable power plants which are coming up, but there is an equal importance of the distributed solar being put up. And with the recent introduction of PM Surya Ghar Yojana, PM Kusum Yojana, the distributed landscape has received a significant fillip. So over this decade, 2030, about 80 odd gigawatts will come from the distributed solar being put up. And that again lends itself to a significant opportunity for somebody looking to enter the ecosystem. On the services side, it's very interesting opportunity, especially with some of the new age tech, with the rising of digital artificial intelligence. There are multiple avenues that one can look at. So for example, on the operations and maintenance side, while there is a core O&M opportunity that some of the players are capturing, but there is an equally important opportunity on the RE/O&M side where someone can look to have digital solutions, for example, and that is a complete white space today in the industry. So that's one of the crucial opportunity that we see. And similarly, on the marketplace side, on the distribution and aggregation side, and when we look at the overall margins or the value pools as they are split across the value chain, if you look at manufacturing or core manufacturing, it will eventually be a 10-12% margin business. When you go to the generation end, it is again going to be a 12-15% margin business. But on the services side, which is also less capital intensive, there is a 30-35% margin to be captured. So, some of those areas are also ripe for disruption. So O&M, for example, getting into hardcore analytics on the battery energy storage side, on the wind side, on the solar side, those will eventually prove to be game changers for the industry. And these are the areas which are also ripe for disruption. as we look at those today. On the consumer side, again, there is significant opportunity, especially on the aggregation side, on the marketplace side. We have seen how e-mobility is getting disrupted. I think on the renewable side, on the biofuel side, again, a similar opportunity exists where someone can be a consumer facing and look to aggregate, resulting into new business models being put in place. So that's one of the main areas we wanted to talk about. I think if we just summarize it, there are viable opportunities sitting today, and those are again well-funded opportunities that one can look to have. So there is manufacturing, for example, across solar ancillary, and then there are future technologies that one can look to develop, to look to grow. And these are again, significant, sizable opportunities, very high margin opportunities as well. But this will require an entire ecosystem to come up. This will also require risk capital, funding, as well as other enablers to be put in place. So I think on the regulatory side, it is quite well known. I won't stress or I won't take a lot of time on this. But on the regulatory side, we know there are blending targets. We know there is renewable purchase obligations with the recent PM Surya Ghar Yojana, PM and the PM Kusum Yojana that is now going into full swing. There is also viability gap fundings and all of that. So all these actually lend themselves to a lot of advantage for entrepreneurship, especially on the services side, on the allied manufacturing side. There is other set of enablers that one will have to put in place and also tap into the entire ecosystem of the funding, of getting enablement from the larger developers. And I'll just invite my colleague here, Udeep, to talk about some of those enablers.
Yeah. Thanks, Gaurav. Right. Thanks, Gaurav. On this section, we'll talk a little bit about the startup ecosystem, the funding around it, where is it that we are seeing the maximum action, where do we see the blind spots, what are the challenges, and what, in our view, can be done to mitigate some of those challenges. Right. So, over the last few years, what we have seen is the climate tech funding landscape is becoming more robust by the day. And some of the figures that you see on this page, right, so we, in 2023, we had more than 250 unique investors across, 6 different unique investor groups who provided funding in one way or the other, whether it be debt, equity, loans, grants, and so on and so forth. So, and that was also, the first year in 2023 when we saw significant participation from corporates in India establishing climate funds, whether it be folks like Loda or GeoGen Next and so on and so forth. And almost half of the equity funding in that year came from corporates, which is a good sign as well, which otherwise on the equity side has been traditionally been dominated by PE VCs. But we see a lot of homegrown industrial houses also becoming active. PVC, as I was saying, is always there, has always been there, and it's the significant presence on this. And another thing that we always talk about equity investments, but there's a lot of debt investments that also come in, whether it be through the DFIs or through the climate funds, both international as well as Indian. And in 2023, again, we saw upwards of $17 billion investments in India in climate tech versus equity investments of anywhere around 4 to 5 billion. So just another bit, right? And what this is helping India do is create a vibrant ecosystem of startups across 5 key dimensions of climate mitigation. And I'll emphasize on the mitigation part of it because there's a whole host of climate adaptation issues that one needs to tackle, and which we believe is a blind spot, and we'll try and address that blind spot later in the presentation as well. So when it comes to climate mitigation, there are 5 key areas, as you can see here. Now, an interesting fact is that, although mobility accounts for almost or less than 10% of the GHG emissions, it is able to corner more than 80% of the climate tech investments. So, and when I say mobility, it's all your Ola Electrics and Aethers and, Blue Smarts of the world. So within climate mitigation itself, so climate mitigation, climate adaptation, just a framework to think about it. Now, climate mitigation, 5 areas. Within those 5 areas, mobility is seeing a lot of traction, and probably will not get into a lot of it there because it's anyways late stage, deeply funded, lots of not just unicorns, but also listed companies and so on and so forth, right? So mobility, we are aware, but where we need, within mitigation, where we need a lot of focus is in the other 4 domains, which is your energy transition, waste and circularity, sustainable agriculture, and industrial decarbonization. Probably I'll touch upon select one of these, right? So energy transition, again, and we have seen a lot of investments in energy transition as well because of the proven viability of renewable energy in particular. And we have seen a lot of startups grow big, even industrial houses getting into it, and so on and so forth. But then there are a lot of underserved markets and areas which one can look at. Like, for example, in rural farms, where one can look at solar-powered machineries and irrigation pumps and so on and so forth. So those kind of hotspots or blind spots still remain. So off-grid is one example which serves areas in remote location areas where you have limited electricity connection and so on and so forth through solar solutions. Similarly, on the waste and circularity, again, we see it as a big opportunity and one that is probably more mature after mobility and renewable energy within the energy transition. So to take an example, again, RESL has a proven business model and a profitable unit economics around a variety of things, but more prominently in for example, in recovering precious metals out of industrial waste, right? So then, and similarly, there are many themes in waste and circularity, be it plastic recycling, be it biogas through agri-residue or other residue valorization and so on and so forth, which have their own which definitely provide opportunities, but have their own individual issues, some of which we'll talk about as we go along. And by the way, biogas is a critical element as we move towards a more gas-dependent economy to reduce our import dependence and the import bill, and not go down the route of what we have on crude. Biogas is a piece of puzzle that can solve substantial amount of it, given we solve some of the supply chain problems therein. Now, similarly on sustainable agriculture, I think Ninja Cart we have heard about, but another one I would like to focus, because this is something close to my heart as well, which is industrial decarbonization. And any net zero program targets, etc., that we hear about, and particularly in heavy industries, likes of oil refining, likes of petrochemicals, cement sector, and so on and so forth. What we realize is to get to net zero, and in absence and keeping within the existing rules and frameworks which likes of SBTI, etc., have put in, where you can only offset so much, which is the last 5%, 10% of your emissions can be used through carbon sinks and your investments in forests and green areas and so on. So if that continues to hold true, a large portion of the mitigation of these GHG emissions from heavy industries needs to come from carbon capture, utilization and storage. And while it might sound like something which is still 15, 20 or 50 years down the line, I think there are potential use cases which might be worthy to look at even from an economics point of view even today. Urea sector is a prime example of that. So urea sector has been using carbon capture and utilization for ages, for example. So there's a circular loop of carbon that they utilize in-house. But obviously there are requirements on the purity of the stream, the pressure which the stream comes online and so on and so forth, right? But then you can have select stacks, chimney stacks in refining, for example, PSA of gas and so on and so forth, which can be tapped by carbon capture as a starting point even today, with little bit of support around carbon taxation and so on and so forth. So carbon clean is probably one such example. But having said that, a lot of action happening in India, a lot around mobility and energy transition, but a lot needs to be done on some of the other areas as well. Now, right, so all of what we saw on the last page, pertains to climate mitigation, which is really to help us reduce our carbon footprint in future. But unfortunately, we have already entered, an era where we are seeing multiple adverse effects of climate change even today. And we need to talk about climate adaptation, irrespective how do we feel about it or how cynical it might make us feel. But then, and there are 4 key themes around that, right? And let me first talk about something that's not there on the slide, but why each of these are required, and through some numbers and anecdotes and so on, right? So, resilient food systems. The most conservative of estimates, almost 45% of India's farming population is already impacted in a year through some or the other climate-related adverse impact, whether it be climate-induced droughts, floods, which impacts your soil quality through degradation, or seeds, and increased incidences of pests and whatnot, right? Another estimate, we are losing annually almost 2 million hectares of arable land due to a variety of climate change issues. So resilient food systems, and there are a bunch of solutions around that which we can come to, but that's one big theme. Sustainable cooling, I think I don't need to mention this, but I guess we all know this, that we have already entered an era where the yearly warming is going to be significantly higher than what it has been in the past. So according to most estimates, the temperature in Himalayas is already 0.6 degrees higher since the industrial revolution, right? So it's already happening. More than 90% of the days just in last year in India had some or the other adverse climate impact, which we suffered. So sustainable cooling, again, a variety of opportunities there. Water availability. India as a country, we depend a lot on groundwater. More than 25% of our groundwater is already severely depleted or overexploited there as well. So we need to wean off our almost our addiction on groundwater. We also, by estimates, only recycle only 28 to 30% of our wastewater, while we have the potential to take it up to 80%. And that's where a lot of, the innovations around water treatment, community water purification, and others can come into play as well. And finally, build better infrastructure. Yes, we would, as urbanization happens, etc., there is a need for greater affordable housing, and all of that is there. But then, we are already in midst of significant migration, invisible migration that we are not talking about. By a lot of, by estimates, just in 2020, India saw around 14 million climate migrants, which a prime example of which is Sundarbans. There is a village, I'm forgetting the name, but since 1960s, we have lost almost 50% of that village's landmass because of sea levels rising, and it's happening right in our backyard in Sundarbans. So when I say 14 million, you can imagine a lot of those people moving to Kolkata and south of Bengal. And this 14 million is likely to rise to 30 million by 2030. Now, to house these migrants and to provide healthcare and so on and so forth, we need significant investments and innovation in how we build infrastructure of tomorrow. And some of this can be enabled through, for example, faster micro construction and through 3D printing and stuff like that. And some brilliant examples around, we have Tavasta, modular housing, which are already working in this. And, all of these four adaptation measures also provide significant opportunities for young budding entrepreneurs to tap into. Moving on, I think we talked about some of this. There are, significant issues with our climate tech ecosystem, particularly around, how our, and we took an example of mobility. So while transportation accounts for 10% of GHG emissions, it is seeing almost 85% of our climate tech investments. Because, because yes, there's a proven sort of business case there around EVs and so on and so forth. But when we think about it, how come that proven business case come around EVs, right? So it was really Tesla and earlier patient capital that went into Tesla and the likes through a blend of funding from government, from a variety of institutions towards making EV happen, and that kind of burgeoned. So similar kind of funding is required, and this a related point is also the point number 3, where we need these longer term investments in deep tech, which is only possible through government interventions and some of the DFIs, etc. Another, enabler, I would call it, is the circular sustainability infrastructure. And the prime example, again, here is one, plastic waste, but also biogas. So the fragmented nature of agricultural residue waste that is generated prevents us from tapping into our biogas potential as a country in a big way. And if we are able to solve that part of the value chain, really there's a lot of play like this. We have the technology in place, we have the business case in place, we have the government mandate in place, also regulatory support through SATAT and whatnot. But really we need to solve that supply chain problem to collect from the fragmented source the residue to really get, and how to incentivize the farmers and so on and so forth, right? And that's when it becomes a potential very productive breeding ground for entrepreneurs and startups to flourish. Similarly, we have seen a lot of startups and also some of who have gone on to become medium-sized or SMEs almost in the plastic waste domain as well. So To conclude, I mean, what I'll say is from all the stakeholders in this space, we'll really need uh, actions around select points, right? So, with all the to all the entrepreneurs here, really the the push would be to for us to look at not just climate mitigation and late stage areas, but also look at climate adaptation because this is happening today, and we need to take care of the adverse impacts that we are witnessing today. We also need to go beyond the urban markets and look at, because a lot of the solutions, so for example, the biogas supply chain that we talked about, the plastic waste, while the collection and the segregation is well established in places in tier 1 and tier 2 cities where there are established municipalities and so on, but then in rural areas, there are large untapped opportunities to be had there as well. And the third would be to also expand our horizons into how we make, outside of mobility and large-scale energy transition initiatives, how we seek grants and concessions. So just one tidbit there, only 1 in 4 startup in this climate tech domain has raised a funding in India. And also fintechs are doing a way better job in raising funding than the climate tech startup is doing currently. So there's some way to go there. Similarly, we talked about, I'll not probably belabor each point, but then the point around investing patient capital in deep tech is something which cannot be emphasized more. So places like carbon capture, which is absolutely crucial to decarbonize heavy industries. So we can start small, we can start at looking at, and can sound tactical, but we can start identifying, how high purity, high pressure chimney stacks across our heavy industries in India and look to fund, investments into how to turn those pilot stacks into carbon capture and storage models there, and then build from there. So just to take one example. Now, similarly, we would again on the corporate side, many of these newer areas would benefit, like recycling is already through some of the procurement policies that will help create a market for these nascent areas. Right, so EPR is doing a good job at that. We need similar sort of push on places like green hydrogen, places like biogas, and so on. And finally, government is already pushing a lot, but then, one key point here would be to make sure that, some of these innovations, we create a fertile ground for them to prosper and also get technology transferred from global hotspots where a lot of this innovation is happening. Else, we might face a similar scenario what we are currently facing in EVs and semiconductors and whatnot. So we'll really do well to probably push the envelope there as well. So with that, I'll probably pause here, and we have a few minutes to take any questions, queries you might have. Sorry, yeah.
Yes.
Yes.
Hello, I am Ashish from Chhattisgarh. I just wanted to ask you a very practical case, as in what we are facing. Is the first thing is, if we have a funding of around 20 crores, and we expect a 15-20% margin maybe. So I mean, and a sustainable growth, as in EVs mein what we see is uh, from 2020s to 2021 to 2022 to 20, the demand has crashed a bit, maybe due to some many factors that you also said. But what might be the one of the nice places that we can invest in? No manufacturing we can go ahead with, but in the services or in the generation, or you said like the EV stations and all. I mean, where can we go ahead looking at the, I mean, the challenges that we are facing, being a landlocked state in Chhattisgarh and not much manufacturing there, and but we have a financial base of around 20 crores. So how can we go ahead in like the new tech or the new? I'm an IITian actually.
Sorry?
I am from IIT BHU. We are running into, we are currently doing the real estate projects there in Chhattisgarh. But how can we enter the energy sector? I mean, if you can just uh, maybe give me a basic overview, if you can just.
So I guess I can
I think you
attempt to
got my
answer.
background, right?
Sorry?
You got my background, right? I
Yeah,
mean,
yeah, I
basic.
got the background. I mean, at this point of time, it's difficult to pinpoint one particular idea or one particular sector. We can probably discuss a bit more, but on the, at least on the material side of things, I can think of, related to agri chain. One can think of either the cold storage supply chains as a service could be one. Even low scale, but as you did mention, non-manufacturing, but biogas can be something that can be looked at, particularly if you have a grid injection facility nearby, that could be really something that can be looked at. But even with cascades, it can be worked out depending upon the intensity of farming, the catchment area that you have. That can be very interesting with the Satat scheme there. No, Gaurav, if you want to add to that, but
I think those are some set of opportunities. Since you mentioned non-manufacturing, I think on the entire circular economy side or waste to wealth side, there could be significant opportunities. And over there, there is one disposal side of things, which may not be very high margin, but there is an added or a value added angle of getting the rare earths back. How can you recover that? So those are some of the areas which are ripe for disruption. And as some of the, even these new age technologies, as they become obsolete and as you look to replace them, there is a significant opportunity that you'll see on the entire circular side. Then there are ample service-based, opportunities that one can tap into. I'm just mindful of time. I think there is a minute to go, but yeah, if there is.
let's take probably one question and then. So one last question and then we'll probably wrap and have a
Hi, I'm Sajani Patel from the Global Heat Reduction Initiative. So my question, I wanted to know if Kearney is venturing into methane mitigation strategies, because as you rightly mentioned, it's not just the net zero that we are focusing on, but handling the climate change harmful effects that's happening on everyday basis. So in order to drive the heat reduction, I wanted to know if you guys are venturing into anything in that regard.
So it drives.
Methane mitigation strategies that drive heat reduction in a much faster way compared to carbon dioxide reduction, or any super pollutant reduction for that matter, like black carbon, HFCs, or tropospheric ozone in that area.
I mean, look, we understand apart from focusing on carbon emissions, we also need to look at methane emissions as well. which is and which ultimately we cover into convert and then track into carbon equivalents and so on and so forth. So there are a whole host of opportunities there also, right? So for example, zero flaring around upstream oil and gas is one big theme that's going around. Agriculture is a big, agriculture and the farming sector is a big contributor towards methane is there. So there are some opportunities there, very early stage. But then thing that you mentioned around HFCs. So also, how do we prevent, for example, leakages in the gas supply chain? For example, there are technologies that have been used elsewhere are also being used for those purposes. Things like LIDAR, etc. So yeah, so some of those are ones that I can think of.
I understand. I wanted to know if Kearney as an organization is moving in that regard to include methane and many other super pollutants in your action plan in the coming years at least.
Yeah, absolutely. That
Good to
makes
know.
sense.
Yeah.
Yep. Thank you for that. All right. Thanks a lot. We'll wrap it there. We'll be around, so happy to chat if there are any further questions, thoughts. Thank you.